So over the past 4 years of trading, I've tested hundreds of different entry models. I'm going to show you the top 3 that I found that give me the highest win rate and the best risk to reward, and they're pretty simple. I have an 83% win rate using this. So I have 3 main entry models, a type 1, type 2, and a type 3. The first two, type 1 and type 2, is mainly candle behavior. So it's individual candles. What kind of does that mean? It's how does a candle move throughout the life cycle of a candle? How does the previous candle close affect the next candle open? If you have a candle close bullish here and you've been moving kind of bullish and you're looking to then create a buy for a continuation of that uptrend, you want to be first looking for it to open, create a bottom wick in that first half of that candle. So if this is an hourly candle, you're looking for it to create a bottom wick in that first half, maybe the first 30 minutes, maybe in the first 15 minutes, just to create that bottom wick and then push bullish in that second half of that candle. So that's candle behavior. What this would look like on market structure wise is that you just have a clear uptrend here. Candle behavior and market structure, there are two main ways that I break price action down into, and that's how I analyze and define these type 1s, type 2s, type 3s. What this would look like is just you have a candle open, creating a bottom wick, and then you have a push forward. Candle behavior makes it really easy to give timing to market structure. When are you looking for a pullback? When are you looking for a push? Maybe you're looking for a pullback in the first half of this new hour, looking for a push in the second half of that new hour. And this is why I trade the second hour of Asia session with my Discord every single day, because it's so easy trading that new 4-hour candle in that first half with that candle behavior. But how this relates to type 1s, type 2s, type 3s. A type 1 is just a simple candle close. You're going from a bullish candle close to a bearish candle close. So it's a change in direction on that candle close. An example here is that you have a bullish candle close and then you have a bearish candle close. That's a type 1. You have a candle close in your direction. So if I'm looking for sales, overall direction is bearish. I want a candle close on a certain time frame to be in my direction. If I go on to gold, a type 1 would just be a candle close in my direction. I'm looking for it to create a top wick in that first half of that candle here, entering above the open. So if I'm looking for a sell, I want to enter above the open to get the best entries, what that would look like. So trying to enter on that pullback on this type 1. And I define levels just at the open and the close of price. So just at the body, that's how I define levels at. So another level would be here and then there. That would be like an area of interest into. So that's how I define areas of interest levels, and that relates into those type 1s, type 2s, type 3s. So type 1 is just a bullish to bearish candle close. If I'm looking for sells, this is good because now the hourly candle is aligning with that. So I'll be looking for a sell in that first half of this new hour above the open to create that top wick to hopefully push flip in that second half. So that's a type 1. If we go to a type 2, it's exactly the same as a type 1, but you're closing beyond structure, beyond a level. You're going from a bullish to a bearish, or a bearish to a bullish candle close, but you're closing beyond a level. Remember we talked about a level being at the open and the close of price when you go from bullish to bearish, but you're closing beyond that. Example of a type 2 here would be this candle close. You have a close beyond a level. Here, the candle body closes beyond a level. So you're looking for it to create a top wick in that first half of that candle, have a pullback to either this level or this level, depending on how big the break is, and take a sell above the open there. So this would be a type 2, where you go from a bearish to a bullish, but you close above that level there. Another example, this would be a type 1 here. You go from a bearish candle close to a bullish candle close, looking to take a buy below the open for it to flip and push bullish. So type 1s, type 2s, that's mainly 5 minute and up. So because you're trading individual candles, you're trading 30 minutes, an hour of price action, whereas if you go onto low time frame market structure, you're trading the exact same period of time, just looking at it in more detail. So a type 1 on the 50-minute time frame might look like a type 3 on the 1-minute time frame. What is a type 3? A type 3 is just a shift in market structure, change of character. Very similar. You're just having a change in character. If you're looking for a sell and you're making higher highs and higher lows, you're looking for it to first create a new high, break a high, then immediately break a low here. You want volume to come in, a really strong move, bearish, and a strong break of a low. That's probably one of the cleanest type 3s. You always want to be trading with volume in your direction, in your favor. I'm always looking to enter with volume. So this is a clear shift, a break, a type 3. So you're looking to enter on that pullback and then hopefully take a sell, stop above the high, targeting a previous low or previous area of interest here for a nice trade. It would look like this. I mainly use this on 1 and the 5 minute, but price is fractal. You can see this on the hourly, on the 50 minute. This happens on the 4 hour, the daily. Price is all fractal. So even on the weekly, you can see here, we have a weekly type 1 close bearish. You go from a bullish to a bearish candle close, like at the previous area of interest, so you can look for sells around there. You have another bullish type 1 here. Bit of a bearish, like a bullish type 1 here. Bullish type 2 because you close beyond this structure. So it's all fractal. You can use it to find direction, to find an area of interest, and then to find entries as well. So that's how you kind of refine and stack those time frames. So these entry models, type 1s, type 2s, type 3s, it's all about aligning and connecting different time frames in your favor. This is why in my journal I have types, but I also have time frame types. Is it a 1 minute type 3, a 5 minute type 2? Am I entering with 15 and 30 minute close in my direction? Is that type 1 or type 2? Lots of detail that you can go into. So it's very simple on the entry models, but it's all about stacking those different time frames and connecting them to align. That's how you stack probabilities in your favor. I have a 50-minute type 1 candle close bearish here, where you make that top wick, create that new high, and then you have a strong rejection, reaction. You go break that low. You have a candle close bearish. You're creating this pullback here on that new 50-minute top wick being formed. So you're looking to take a sell above the open. The best trades always be sells above the open or buys below the open. That push and that pull. You always want to keep in mind that markets always be in a constant push and pull. It loves to fill its moves. When you have a push, when you're going to have a pullback. Think of price action as an elastic band. It's a wrestle between buyers and sellers. When you have a big push, you might have a snapback of that elastic band. So always be mindful of that. So I'm going to run you through an example of a gold buy that I took yesterday with the Discord that played out pretty nicely, that we all kind of took together. Pretty clean price action on this. So I'll run you through a simple example of how I identified and took this. So I always kind of start with higher time frame wise. So if we just go back to here, daily wise, we had a previous daily close bearish. So counter behavior wise, in that first half of the day, you're kind of looking forward to create that top wick and then maybe have a push down. Then onto the 4 hour, that's looking pretty clearly bearish. You kind of have a bit of a 4 hour type 3. So a bit of a shift on the 4 hour, also looking bearish. On the 1 hour, still again, looking very bearish. You have a break of a low, kind of switching this area of interest, very kind of bearish here. So it's all kind of looking bearish. But if we go down into this recent price action, we've kind of broken a low. We have this previous like kind of small time frame structure, but we've broken some highs. So a bit of like a type 3 bullish. Keeping in mind that high time frame is going to be bearish. You have overall structure being bearish, but this most recent structure is bullish, with it being in the first half of that day, with the previous daily candle close bearish. You're looking for it to create a top wick first, and then have a reaction to maybe this previous area of interest to then drive down. So low time frame bullish, high time frame bearish, which is what I put in the Discord at just before the 2nd hour open. Low time frame bullish, high time frame bearish, using this analysis here. And now at the 2nd hour of Asia, the 4 hour has closed bullish. So that's added confirmation that in this period of time, we are going to be bullish first, and then we can look for sales later. So if we go into the hourly time frame, we have an hourly type 2. We have a close beyond structure, beyond a level here, pretty clear. And it's looking pretty nice. So 30-minute, all looking bullish. So in this current period of time, we are looking bullish, even though high time frame wise, it is bearish. You have a bit of a 30-minute shift, a type 3 here, 15-minute, another type 2. So you have a 15-minute, 30-minute, and hourly type 2. Going on to the 5-minute, this would be a classic break and retest here, where it's just pretty clear trend on the 1 minute. But if I just bring this up and you look at all these different time frames, just kind of looking to stack time frames in your favor, looking for them to align. The best trades happen when everything's aligned in one direction. So I'd be looking to take a buy at that level on that 15-30 minute hourly type 2, simply placing my stop loss below the low, and then where would I target for market structure? You have lows, highs here, so I would put a take profit around there. It's a pretty big area, pretty nice, simple, easy, for a 2.8 risk to reward. I'm looking to take a buy below the open, to create a bottom wick first, to then create the bottom wick, push up, and fill in some of this move here. Stop loss below the previous low. Why is that? Because that's my invalidation point. If we make a new high and then break a low, that's a type 3 shift against me. And if that happens, I'm either not taking a trade or I might take a sell, where that might have something like that. The 4 hour opens up here, hourly 4 hour, 30 minute, and you immediately go bearish. You create a bit of a reaction, but you create that bottom wick on that 4 hour, on that hourly. You respect that previous low, and then you push bullish for a pretty nice trade. Lots of volume coming in. That was around 40 pips. Pretty simple and easy. Using the type 2 on that 30-minute hourly, 15 minutes. This was just a 1 minute break and retest. But you're also using that type 3 for larger time frame structure to find overall direction as well. So it's very flexible in that approach. Also, bonus, I look at DXY for added confirmation, added confluence. I find it really helps me stack probabilities in my favor when direction isn't as clear. How I've been discussing type 1s, type 2s, type 3s, I look at DXY the exact same way. So if we go to 11 a.m. on DXY, the exact same time that we're looking at on gold. Overall structure wise, you're kind of ranging, but if we just look on kind of lower time frame, we have a pretty clear bearish downtrend where we're making lower lows and lower highs. But if we're just going to zoom into this price action here, what do we have? We have these previous highs, previous area of interest. We're making new highs into that. We make a new high, and then we have some volume come in and a pretty clear break, move bearish. So around that second hour, 10:59, we have a type 3 forming. So you can use an entry model on DXY as correlation or confluence to take a buy on gold. So you have a pretty clear shift on DXY, which gave me more confidence to take a buy on gold, where you have it break a low, pretty strong break, come back, create a pullback, and then push bearish as well. So what that might look like is you have a break of this low here, like pretty strong break. You have a 30-minute candle close bearish. You open, create that top wick in that first half of the candle, and then push bearish. So 11 a.m. opens, you create that top wick, and then you push. So hopefully that helps. Counter behavior, market structure, with those different types, type 1s, type 2s, type 3s. Put this into practice. If you want to trade it, you're going to have to put in the work and practice these type of entry models. So type 1s, going from a bullish to a bearish candle close. Type 2s, exactly the same thing, but beyond structure. Type 3s is just a shift in market structure. So you're either making new highs here, and then you have a shift for a sell, or you're making new lows, and then you have a shift for a buy, entering on that pullback. And most of the time, that pullback is going to be at the formation of a new higher time frame candle. Could be a type 1 or type 2 as well, just to connect all those different time frames. This can be used pro trend, counter trend. There's also a lot more detail that you can go into around how do you break, how do you pull back, when or where are you going to enter on that pullback. And if you want to trade this way with us every day at Asia session, get similar wins, and it's always fun trading with other people. It's also a lot easier, give each other feedback, and this is how you learn. The quickest way to become profitable is to practice by doing, having group discussion, and then teaching others. So that's why the community is set up in a way. So if you want to join, click the link in below. So I hope this helped to clarify how I take entries. If you have anything you want me to cover in the future, just drop a comment. If you like this video, like it. If you want to see more, subscribe, and I'll catch you guys later.